The ability to simplify means to eliminate the unnecessary so that the necessary may speak. Hans Hofmann. That is what we do every single day here at Charting Wealth. We, through our charts, help you simplify seeing price movement on these charts, whether we're looking at the 2-day chart, we're looking at the weekly chart, particularly for our weekly vertical crossovers up or down, and of course our 4-hour chart. And we have some fascinating things as this week comes to a close to cover with you, for you to look out for at the close of the market on Friday. Now, what's going to really help you in putting together potential practice trades this Friday is to watch the newest video we have available. It is going to be in the show notes for all subscribers. If you're not a subscriber, you need to become one so you can get stuff like this. You go to chartingwealth.com, put in your name and your email address for free. Every day you will get our daily review, and once a week we'll be recording after the market closes on Friday the comprehensive review and forecast. This training, the secret for maximizing the Monday effect. The Monday effect is basically what happens on Friday with the way that news is parceled out toward the end of the day and the way the markets flow. Typically pushes itself through the weekend, and you see the same movement on a Monday. We talk about the history of that and how we make it most effective with our weekly and 2-day crossovers, and teach you how to use it and want you to practice trade it. So if you're a subscriber, by all means, look for that in your show notes. Very, very important. You need to listen to it tonight or tomorrow morning. That is Friday morning, Thursday night, because you may have the opportunity, we'll talk about it here in just a minute, to jump into a trade, a practice trade, that hopefully will be successful and will be using the Monday effect. And you need to know where to set your good till canceled sell orders on that practice trade. And of course, how to use the crossovers and the Monday effect for you. It is a beautiful thing, and it tends to work time and time again, but we want you to practice trade it to see how it works. Okay, let's jump into these charts. Stocks are up. Bonds and gold are down. That's the way we like to see things. If stocks are up, we want to see bonds and gold down. We don't want everything up or everything down. Always sort of worries me when things aren't doing what they're supposed to. What do we see happening with stocks? Well, for the week now, we have a green up candle on the S&P, up 0.87% for the day. Quite beautiful, isn't it? It's pushing higher. The high, 317.99. The high the prior week, 315.31. The week before that, 315.48. So we've reached a higher high. We have an okay green up candle. Prices above the weekly trend line. Price percent oscillator heading up. Derivative oscillator is about flat for the week. So that's good. It's not decreasing at this point. Go to the 2-day chart. Look what we see happening. Look what we see happening. We see that the 2-day is trying to cross over. Will it be an up day or a down day on Friday? So far, we have a green up candle trying to push through the red signal line. If Friday ends that way, my friends, would you consider pulling the trigger on a practice trade? Won't cost you anything at around 355 if there is a crossover on that 2-day chart. Means the 2-day chart is moving around in the direction of the weekly chart. If we have that crossover, if that occurs, again, consider doing a practice trade on it, putting the Monday effect to use. Now again, it's not as good as a weekly vertical crossover, but it is the 2-day crossing back over in the direction of the weekly. And the weekly's pretty strong. So we'll see how that works out for us. Now, how to calculate what your good till canceled sell order, your profit is on that practice trade, you need to listen to the training. I'm not going to go through all that, but we tell you how to set those, how to consider setting those. Okay, that's where we are on the S&P 500. What about the NASDAQ 100? Again, nice big green up candle above the weekly trend line. Price percent oscillator heading up. Derivative oscillator still for the week losing some momentum. You know, not a big deal, but we note that. And we're not as close to a crossover. Now, if it's a big up day, And the Qs, the NASDAQ 100 up 0.75%. If it is a big up day, we still might have a crossover. It's going to be tough for that to happen, but it could. And we'll wait and see. If it doesn't, maybe it'll happen on Tuesday of next week if there's continued up movement. Could be a down day now. There may be no potential practice trade on the S&P or the Qs, but we're going to watch the charts to see. Derivative oscillator still negative. Price percent oscillator still quite negative. Could cross over, not as likely as the S&P. What do we see on the 4-hour chart? Way up in the morning. Some subdued movement in the afternoon. Price percent oscillator heading up. Derivative oscillator gaining momentum throughout the day. That's where we are on the Qs. So in particular, pay attention when it comes to stocks to that S&P 500 on the 2-day chart around closing time. What do we see going on 20-year bonds? For the week, we have a down red spinning top. It is solid. It is moving further down. It is hitting a lower low than the prior week and the week before that. We see that the price percent oscillator is heading down. Derivative oscillator still losing downward momentum. Go to the 2-day chart. What do we see there? Ooh, look what's trying to happen. Is that not the cleanest of all? Now, again, if we see this candle finish up, it's only the first day of the latest 2-day candle, and it's crossed over going down. What does that mean around 355? That the 2-day is flipping around, going in the same direction as the already existing weekly. And pay close attention to that. When that candle closes, it may very well give you a jumping in point. Let's look at the 4-hour chart. We can see how it bounded off. It was trying to cross over going up at the end of the day on Wednesday and then boomed over going down on Thursday. Again, if that continues, might give us a jumping in point to ride down. Now, do pay attention. Remember, this would be an inverse trade. So T, B, F, Tango Bravo Foxtrot, is the ProShares short of the 20-year bond. And look what it did. It went up over the course of the day on Thursday instead of down like the underlying ETF, which is TLT. That's what an inverse fund does. I'm going to put at the end of today's video a link not only to how to purchase our book, but also to the special training we have on inverse funds, how to practice trade when markets are crashing. I want you to have that. I want you to take that training if you haven't. If you've not taken it in a while, watch it again. So you got a couple of things for homework today. They will bode well for you. And again, way down today, 1.65% on bonds. We're going to move away from the 4-hour chart, back to the weekly, and finish up with gold down for the day, 0.35%. Now, what do we see going on with gold? Gold is still heading down for the week as far as the price percent oscillator goes. Derivative oscillator losing momentum. Look at that weekly chart, though. It is a green hammer. We got a solid, well, an open box. Now, again, that is again, tends to be stronger movement than a solid green. Spinning top, lot of wick on the top, little bit on the bottom. Price percent oscillator still heading down, but again, gold really sideways and up a little bit for the week so far. One more day on that weekly candle. What do we see on the 2-day chart? It's actually moved away from the red signal line. And again, we have a green up candle forming. It won't be drawn until tomorrow. That is until Friday, close of the market. So that's something to watch. That is, again, the average pace Heikin Ashi candlestick. We look at the 4-hour chart and we see where the down movement came in gold. It came in the afternoon. But the 2 days still pretty strong up. The weekly chart is down, but not that strong down. And this 4-hour chart just started to roll over in the afternoon. Don't know that we're going to have a trade tomorrow as that 2-day candle closes. Just doubtful that that's going to happen on gold. So we'll continue to watch, wait and see how gold sorts itself out. What we're really going to watch, number one, is a potential inverse practice trade on 20-year bonds. Either if you want to look at practicing your options, you could look at an option, a put option on TLT, Or you could look at just purchasing, again, in a practice trade, a large swath potentially of TBF and see how that goes for your practice trade. Second is we're going to keep an eye on what's actually going on the S&P 500, in particular that 2-day chart, whether it's going to cross over again. Not as strong as a potential down move in bonds, but we'll wait and see because it's not Friday yet. And remember, these charts lead us. We don't push the charts. We can't push the charts. The charts are too big for us. That is billions of transactions that we have no control over. We are trend followers. We let the trends show us what to do and when to do it, and we practice trade it again and again and again to learn what it is we're doing. My friends, that's where we are. If you hadn't purchased our book, it is available, 13th Printing. Sent a bunch of them out yesterday all over the world and all over the United States. If you don't have a copy, follow the link in the show notes. If you live overseas, you're going to have to email us because Square will not clear your foreign credit card. I don't know why, but email us cw@chartingwealth.com. We'll email you back a PayPal invoice. Pay that. I'll send your book to you wherever you are in the world, an autographed copy. In addition, if you'd like to be a Patreon supporter, we've got all sorts of great things for our Patreon members. You can find out more by following the link in the show notes. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.